Welcome back. Today on the Byte-Size Brief, we're going deep on MicroStrategy. Now, for years, this was a really straightforward story, right? It was a software company that bought a ton of Bitcoin, and its stock was basically just a bet on the crypto's price. But that story, it's completely changed. So today, we're going to dive into this huge transformation from what was basically a digital vault into something way more complex, a Bitcoin development company, or maybe the world's first Bitcoin bank.
And listen, he's not kidding around. This quote from Michael Saylor's recent keynote really captures the massive scale of their ambition. This isn't just about sitting on an asset anymore. It's about building a brand new financial engine right on top of it. So, here's our game plan for this explainer. We'll start by looking past that old Bitcoin proxy idea. Then, we're going to break down their new digital credit machine. After that, we'll check out the latest quarterly numbers, dive headfirst into the fierce bull versus bear debate, and finally, we'll look at what's coming up next.
All right, Section 1. To really get what MicroStrategy is becoming, we first have to understand what it was. This whole journey from a simple digital vault to a full-blown digital bank, that's the core of the entire story we're unpacking today.
You see, for the longest time, the narrative was super easy. MicroStrategy would use debt and stock offerings to buy up Bitcoin. So if Bitcoin's price went up, MSTR stock would shoot up even more because of all that leverage. It was pretty much the only game in town if you wanted Bitcoin exposure in your regular stock account. It was simple, it was effective, but it was also kind of a one-trick pony.
And this is the million-dollar question. It's the big problem that really forced them to evolve. Bitcoin, you see, is what's called a non-productive asset. It doesn't pay you a dividend, it doesn't give you interest. So if you're a company sitting on billions of dollars of the stuff, how do you generate actual cash flow without having to sell your main asset? That's the puzzle MicroStrategy decided it had to solve.
Which brings us to their big answer, the digital credit machine. And this is where things get really fascinating. It all revolves around a new kind of security they created, a preferred stock they call STRC, which is specifically designed to create a steady income stream from all that Bitcoin they're holding.
So, what on earth is digital credit? Well, the way Saylor puts it, the company is converting economic wealth into a stream of cash flows. Basically, they're taking their highly volatile, appreciating asset, which is their Bitcoin, and using some clever financial engineering to kind of peel off a stable, high-yield cash flow. And then they pay that cash out as dividends to the people who buy their new preferred stock, STRC.
Now check out this side-by-side comparison because it really lays it all out. With Bitcoin, you're betting on huge price growth, but you have to live with insane volatility. STRC is engineered to be the total opposite. It's all about getting high-yield dividends with low volatility. But the real secret sauce here is the tax treatment. Because of how it's structured, those dividends are considered a return of capital, which basically means, for tax purposes, you're just getting your original investment back. So you don't pay taxes on those dividends until you actually sell the shares. It's a huge deal.
And wow, look at what that means in the real world. For someone in a high-tax area like New York City, that tax-deferred feature makes the effective yield just massive. I mean, look at it compared to regular T-bills or corporate bonds. It's not even in the same league. It's designed to be a completely different animal.
Okay, so that's the theory. But how's this whole strategy actually holding up in the wild? Let's jump into the latest quarter and look at its performance, some new accounting rules, and how the market is reacting to all this.
This right here. This is the real stress test. Since Bitcoin hit its recent all-time high, the price has dropped a painful 45%. Ouch. But during that exact same chaotic period, STRC held its value perfectly, 0% loss, and it still paid out 4.5% in dividends. It did exactly what it was designed to do, give investors stability and income while the main asset was going crazy.
And the market has definitely noticed. According to the company, STRC is trading with 130 times more liquidity than your average preferred stock. That's not a typo. It's been a monster success right out of the gate, sucking in huge amounts of capital and proving that there's real demand for this kind of thing.
But there's a new wrinkle you need to know about, and it's an accounting thing. A recent rule change now forces MicroStrategy to mark-to-market its Bitcoin holdings every quarter. In simple terms, that means if Bitcoin's price goes down, they have to report a massive loss on paper, like that huge $12.4 billion loss in Q4 of 2025. Now, this doesn't actually affect their cash or their operations, but it does mean their official earnings reports are going to look incredibly volatile.
So all of this complexity and volatility leads us straight into the huge debate that's swirling around the company right now.
Is this whole new model a genius, self-powering flywheel that's just going to create more and more value? Or is it just a ticking time bomb of leverage and risk waiting to go off?
Okay, first up, the bull case. It all comes down to this idea that Michael Saylor loves to talk about, the reflexive flywheel. The core idea is that each part of the business pushes the others forward, creating this cycle of accelerating growth.
So here's how this machine is supposed to work, step by step. First, they issue STRC to raise cheap, stable capital. Then, they use that cash to buy more Bitcoin. Having more Bitcoin on the books increases the company's net asset value and helps justify its stock trading at a premium. And that premium makes it easier to issue more stock to buy, you guessed it, even more Bitcoin. It's a feedback loop that's designed to constantly increase the amount of Bitcoin per share for investors.
And man, this quote from a Reddit investor just perfectly captures the whole bull mindset. It's a long-term, high-conviction bet, they believe in the flywheel, and they're willing to completely ignore the short-term price swings, focusing only on that one goal, stacking more Bitcoin per share.
All right, but let's flip the coin and look at the other side. The bear case argues that this flywheel is actually super fragile and exposes the company to some massive risks, mainly from all the debt it's using and the new competition that's popping up.
The bears are looking at three huge potential problems. First, there's just the massive amount of leverage. The company is carrying over $8 billion in debt. What happens if we hit a long, brutal crypto winter? Refinancing all that debt could get really, really tough. Second is the risk that their stock premium just collapses. For years, MSTR was the easy way to get BTC exposure. But now, with all these low-fee spot Bitcoin ETFs out there, investors might just ask, why am I paying a premium for this stock when I can get the real thing for cheaper? And finally, it's just plain old concentration risk. No matter how you slice it, the company's fate is still almost entirely tied to the price of one single, very volatile asset.
And this comment, it just hits home. It shows you the real-world pain that fuels the bear case. You know, when this strategy is working, it's absolutely spectacular. But when Bitcoin takes a dive, all that leverage works in reverse, and the pain for shareholders is very, very real.
So, with these two big stories clashing, where does MicroStrategy go from here? Let's take a look at the key events coming up on the horizon that could really tip the scales one way or the other.
There are a few really big things on the radar you'll want to watch. In the short term, any new regulatory clarity, good or bad, is going to be huge. The company has also talked about major banks starting to offer Bitcoin custody as a major tailwind. They're also actively looking for new capital in places like the Middle East. And then there's the big one for the long term, the potential to be included in the S&P 500. If that ever happens, it would trigger a massive wave of buying from big institutions.
So at the end of the day, if you take away just one thing, let it be this. MicroStrategy is not just a passive Bitcoin holder anymore. It's an active financial innovator that's building a whole suite of products on top of its Bitcoin foundation. The game has totally changed. And the true measure of success for them now isn't just the price of Bitcoin. It's their ability to increase what they call Bitcoin yield, which is just the amount of Bitcoin they own per share over time.
And that really leaves us with the big final question for anyone watching this company. Moving forward, what's going to matter more? The raw, untamed price of Bitcoin itself? Or MicroStrategy's ability to keep innovating and successfully build this complex, high-stakes financial machine on top of its digital gold? That's the billion-dollar question for investors today.